keeping up with the crypto world. You can feel like trying to drink from a fire hose, right?
Oh, absolutely. News comes at you from every direction. It's constantly shifting.
But, sometimes if you take a specific stack of recent updates, kind of step back and just look at them together, you start seeing patterns, maybe connections, little hints about the bigger forces at play.
It's like finding the signal in all that noise. Individual headlines are one thing, but seeing what multiple disparate pieces of news tell us collectively, that's where the real insight often is.
And that's exactly our mission for this deep dive. We pulled together a collection of recent articles and updates, mostly snapshots from CoinMarketCap, around early June 2025.
All right.
We're not here to just, read them off. We're here to unpack this specific batch, pull out the essential nuggets, and try to figure out what this particular mix of news reveals about the landscape right now.
Yeah, and looking at this collection, we've got signals from major financial institutions, hints from some very prominent players, potential moves from the governmental side, platform-level developments, and even a stark reminder of the reality faced by individual traders. It's quite a mix.
So think of this as us sifting through this pile on your behalf, highlighting what truly seems to matter in these specific pieces. Okay, let's jump into this collection then. What's the first thing from this stack that really stood out to you?
Well, for me, the Nasdaq news is pretty significant, just given the source.
Nasdaq, right?
There's a Form 8K filing they put out. This was June 2nd. And it proposes a change to the benchmark index for their Hashdex Nasdaq Crypto Index US ETF. The ticker is NCIQ.
Okay, so they have this ETF, NCIQ, already running, and they're proposing to change the index that actually tracks. Why is that particularly interesting?
Because the proposal includes potentially adding leading altcoins to the benchmark.
Ah, okay, altcoins.
Yeah. See, up until now, a lot of the institutional crypto products, especially the ETFs making their way through all the regulatory hoops, they've been focused pretty narrowly, right? Mostly Bitcoin, maybe Ether.
Like the big two.
Exactly. So this move from Nasdaq, it suggests they're looking to build a product that offers broader exposure. It kind of acknowledges that there's market interest and maybe growing maturity in other large cap crypto assets beyond just BTC and ETH.
That feels like a subtle shift, but yeah, an important one. It's Nasdaq, giant in traditional finance infrastructure, signaling they might be ready to bundle more than just the two biggest players into a regulated investment vehicle. What does that say about where they see the market heading?
Well, it suggests confidence, I think. Confidence in the depth and liquidity of certain altcoins, enough to potentially include them in a product that's designed for a wider investment audience.
Right.
And if you connect this to the bigger picture, it hints that traditional finance might be expanding its comfort zone, beyond just the obvious first steps. It raises a question, doesn't it? Could this pave the way for other institutions to start looking beyond BTC and ETH in their own product offerings?
Fascinating point. Okay, so we see traditional finance exploring potentially broader crypto exposure. Now, switching gears just a bit, this stack also includes a little mention of Michael Saylor.
Ah, yes. The ever-consistent signal from MicroStrategy. This update mentioned he dropped the hashtag Bitcoin tracker tease again.
Which historically tends to mean.
Another Bitcoin purchase is likely incoming from MicroStrategy's corporate treasury.
No huge surprise there, given their strategy.
Not a shocker, no.
Yeah.
But it's a reliable data point. It just reinforces that for this specific, very prominent corporate buyer, the accumulation strategy hasn't really changed based on recent market movements. It's just a signal of continued conviction, at least at that level.
Right. A data point confirming that particular institutional thesis is holding steady.
Okay.
Now, taking an even wider view beyond just corporations and financial institutions, this collection of news also includes a piece touching on potential government interests.
Yes, that's the news about Representative Burchett introducing a bill. The proposal is to establish a U.S. strategic Bitcoin reserve.
A U.S. strategic Bitcoin reserve. That's a phrase you usually hear associated with things like oil or, strategic metals.
Exactly.
Applying strategic reserve to Bitcoin.
Yeah.
That feels like a pretty significant conceptual leap for a government body, doesn't it?
It absolutely is. I mean, regardless of the bill's actual likelihood of passing anytime soon, the mere proposal is significant.
How so?
It signals that at least some policymakers are starting to think about Bitcoin not just as like a volatile asset class or something that needs regulating, but potentially as a strategic national resource. It frames Bitcoin in terms of national security or maybe economic stability. That's a dramatically different perspective than we've often seen from governments in the past.
It really suggests the conversation around crypto in, let's say, official circles might be evolving,
Yeah.
moving beyond just oversight and taxation towards actually considering its potential role on a
Yeah.
national strategic level. So we're seeing big finance maybe looking at broader exposure, major corporations continuing their accumulation strategies, and now lawmakers proposing strategic national holdings. It paints a picture of increasing and maybe diversifying high-level interest.
It definitely shows different arms of the establishment exploring very different ways to engage with cryptocurrency, but perhaps, ultimately convergent ways, from investment products to corporate treasuries to potential national reserves. It's quite the spread.
And while these big, potentially tectonic shifts are maybe starting, the day-to-day movements of significant capital just keep going, right? This stack also included a look at some specific market activity.
It did, yeah. There was a report about an anonymous whale, someone involved with a substantial amount of ether.
That was the one who redeemed, what was it, 10,708 ETH?
That's the one. At the time, that was worth around $26.96 million.
Okay, quite a chunk. Where did it go?
It was moved from Lido, that's a liquid staking protocol, and then deposited onto OKX, which is a major exchange.
Okay, so what does that kind of large movement from a staking platform like Lido straight to an exchange like OKX usually suggest? What might be happening there?
Well, it generally suggests preparation for something. Redeeming from staking usually means you're unlocking the capital, making it liquid again.
Right.
Moving it onto an exchange gives you flexibility. It could be they're preparing to sell, maybe intending to trade for other assets, or perhaps positioning for specific activities only available on that exchange.
So we don't know the exact why.
No, not from this report alone. But what's noteworthy here is simply the scale. $27 million worth of ETH on the move. It reminds us that even alongside all the talk of institutional strategies and government reserves, there are major players moving significant capital around, likely with more immediate operational objectives.
Yeah, it really highlights the massive amounts of value that are actively changing hands or, being repositioned in the market, operating on a scale that's just far removed from most individual participants.
Exactly.
And speaking of platforms, the stack also mentioned MEXC, the exchange.
Yes, MEXC announced a new Launchpad event featuring BTC. This is part of what they're calling their BTC Trading Month.
Okay, so using Bitcoin, the biggest name, to drive activity on their platform.
Precisely. It's an exchange leveraging the most recognized and, frankly, most liquid cryptocurrency to attract users, boost trading volume, and generally promote their platform. It's a pretty common competitive tactic in the exchange world.
Sure.
But this specific instance just shows that even as the focus on altcoins grows in some areas, like we saw with the Nasdaq news, Bitcoin remains the primary magnet for user engagement and marketing pushes on many platforms.
Okay. So we've looked at potential big shifts in finance with Nasdaq, corporate strategy with Saylor, government interest with that reserve bill, large-scale capital movements by whales, and platform marketing tactics centered on Bitcoin. Now, contrasting all of that, this stack of sources includes a really grounded, almost sobering reminder of the individual trader's experience.
Right, the short report on James.
Yeah, it just said, James just lost again, this time on a 40 by BTC long. Now he's short, but still can't win. And the piece was pretty blunt about it. High leverage, low returns.
And this is such a critical counterpoint to almost everything else we've just discussed.
Well, so?
Because while institutions and potentially governments are exploring these strategic, often long-term positions or broad product offerings, many individual traders are deeply engaged in the incredibly high-stakes, highly volatile world of high-leverage trading. James's situation, sadly, is a potent example of the inherent risks involved there.
That 40x leverage.
Using 40x leverage means a relatively tiny price movement against your position can completely wipe out your capital. Very, very quickly.
It just drives home the reality, doesn't it? That despite all the talk of institutional adoption and strategic reserves and these big picture trends, a huge part of the market is still this sort of wild frontier for individuals, where the odds, frankly, are often stacked against them, especially when using extreme leverage like that.
It shows just how multi-layered this market really is. You have these macro-level strategic considerations by major players happening at the exact same time as the micro-level, high-risk, high-frequency speculation by individuals. They exist in the same ecosystem technically, but they feel like completely different worlds sometimes.
Okay, let's quickly recap the main signals we pulled just from this specific stack of sources we've been discussing. First, we saw the Nasdaq 8K filing from June 2nd. That proposed a change to the NCIQ ETF benchmark to potentially include leading altcoins, hinting at expanding traditional finance products beyond just BTC and ETH.
Yep. Then we got that read on continued corporate accumulation from Michael Saylor's Bitcoin tracker teas, suggesting MicroStrategy's strategy at least remains consistent for now.
Right. Then there was the significant news, conceptually at least, of Rep. Burchett introducing that bill to establish a U.S. strategic Bitcoin reserves.
Yeah.
That signals an expanding and maybe evolving government interest, potentially viewing crypto as a national asset.
Mm-hmm. And we saw snapshots of market activity, like that anonymous whale moving nearly $27 million worth of ETH, 10,708 ETH, from Lido staking to the OKX exchange, illustrating that significant capital mobility is always happening.
And the platform development side.
Oh, right. MEXC launching a new launchpad featuring BTC for their BTC trading month, showing how exchanges still heavily leverage Bitcoin's popularity for engagement.
And finally, we saw that stark reality check for individual traders.
Yeah.
Captured in that snippet about James struggling with repeated losses using 40x BTC leverage.
So when you put these specific pieces together from this early June 2025 timeframe, they paint this picture. It's a crypto landscape where major institutions and governments are actively exploring deeper, more strategic involvement.
Okay.
While simultaneously the day-to-day market operations include these massive capital movements and the persistent, often brutal, high risks faced by individual participants, especially those using high leverage.
So here's the thought to maybe leave you with, based just on this stack we've unpacked. If major financial institutions like Nasdaq and potentially governmental bodies are taking steps towards viewing crypto as something to integrate into strategic products or even hold as national reserves, how does that fundamental sort of long-term shift, how does it reconcile with the volatile, high-stakes world still being navigated by individual traders like James using extreme leverage?
Yeah, what does that contrast tell us?
Right. What does this contrast tell us about the current state, maybe the ongoing evolution, or even the maturity of the crypto market as a whole? It's definitely something to consider as you watch the headlines continue to roll in.